Hi, this is Mark Gordon with GoldenTicker.com with a market update for May the 18th, 2010. And as you probably know, the markets have been in a correction here for a few weeks. And this correction appears to be normal though. Bull markets usually run for about 2 years or so before entering another bear market. So stocks will probably move higher from here. On a weekly chart of the NASDAQ, we can see that stocks had a 13.8% swift correction right down here to the 200-day moving average and have rallied back up and found support here above the 100-day line. We still need to get above this line here, which is the 50-day line, and also get some closes here above this 20-day moving average. Stocks suffered a correction here at the beginning of the year. This is about a 10% correction, and started to rally here around March the 1st and had a nice swift up move here before pulling back. And we can see back here that this present day bull market began here on March the 9th of 2009, and we've had a pretty good run up here despite a few little corrections along the way, which is quite normal. It's also important to see here that as stocks pulled back, they still held above this previous break low here in the 2100 area, which is a bullish sign. So the longer term uptrend is still intact. And looking now at a monthly chart of the NASDAQ, this correction we're going through now doesn't look all that bad. We are still technically in a bull market here. Anytime prices close above this green dotted line, which is the 20-month moving average, the market's considered to be in a bull run. So we're well into that. Looking here at the indexes, since the breakout around March the 1st, we can see that the Russell 2000 small caps have led the way up and corrected very sharply, of course, along with the NASDAQ, which is this green line here. So the more tech-oriented indexes have outperformed. The emerging markets here actually took the lead here back around April 1st, but have since fallen off rather sharply. This 13.8% correction on the NASDAQ here looks especially scary on a daily chart here. And you can see that it's been trying to rally above this blue line, which is the 50-day moving average, and also needs to start getting closes above this red line, the 20-day moving average. You can also see this previous correction here at the beginning of the year and how we rallied up out of it and had a nice strong run up to 25.35 here. And the Russell 2000 small caps have been the strongest index, and we can see here that we are now starting to get closes above both the 50-day moving average and the 20-day moving average. So the Russell 2000 is once again showing the most strength, and this could actually lead us into a new bull run here. And volatility as measured by the VIX index is really had a huge spike here and got up here to pretty scary values. Hopefully we get settled down into this 20 to 25 zone here, which will make it a lot easier to trade. And Chinese stocks, as measured by the Shanghai Stock Exchange Index, are in a bear market. They've corrected more than 20%, and they did take out this previous break low here that happened last year, in the summer of last year. So that's a very bearish sign. You can see there's no more support here. It's below all these key moving averages. So Chinese stocks look like they're headed lower. And as you probably know, the euro has just been getting decimated after peaking here late last year, and now come off 21% off its highs, despite a $1 trillion bailout proposal by the central banks. So this is quite scary. Also, the problems in Greece look to be spreading to other European countries, which could possibly take down the euro as a currency. So this is something very serious and needs to be monitored. And one of the beneficiaries of the euro collapse has been the US dollar, and it's rallied over 17% here since late last year. And this is more of a flight to liquidity than a flight to quality, in my opinion. And you could see all fiat currencies come under pressure as people look for safer places to put their money, like commodities and gold. And gold has been hitting all-time highs after taking out 1226.40 here, and you can see that it's well above the 50-day moving average and also getting support as it's riding up this rather sharply ascending 20-day moving average as well. So gold looking very strong here as people look to exit paper. This is a great way to gauge the health of the overall market. Apple has been a true monster leader for quite some time and is definitely one of the must-watch stocks. It had a nasty plunge here a couple of weeks ago, 26% plunge off the top very quickly, which was very scary here, but quickly recovered, got lots of support right back over the key moving averages, up above this blue line, the 50-day, and now riding the 20-day moving average with some tight closes here. So this is a very bullish sign here. Lots of support for Apple. In the first quarter of 2010, they delivered an 86% increase of earnings. Just fantastic. And you know I'll be watching this stock for an entry point once the markets go back into a confirmed rally. You can see here that Apple has almost tripled since breaking out here in March of 2009. I just showed you how weak the Chinese stocks were, but not Baidu. Baidu.com is the Google of China, and it is on fire, refusing to even get near the blue 50-day moving average here, riding its 20-day line up very strongly despite severe corrections in the US and Chinese markets. And Baidu just split 10 for 1, so this would have been an $820 stock here. So a chart like this suggests there's strong institutional support for Baidu as it moves higher. And this may be because Google has decided to exit the Chinese markets, and it pretty much leaves them wide open for Baidu. And not all monster leaders have done well, especially during this correction. Priceline.com delivered a 56% increase in earnings in the first quarter of 2010, but still got slammed for a 28.5% correction, and is having a hard time even defending itself at the 200-day line. So Priceline under a lot of pressure here. This is actually a good example of a later stage base, this third stage base failing. A first stage base and a second stage base usually work on a great monster stock, but third stage bases can get a little tricky. And looking at Netflix, this stock broke out here back in March along with the general market, and almost doubled since then. So just on a tear, not even getting near its 50-day moving average, riding the 20-day moving average up. But it is worth noting that there's been a lot of wide and loose price action here in the last few weeks, which is a bearish sign. Another casualty of this market correction has been Green Mountain Coffee. Despite delivering a 82% increase in profits in the first quarter of 2010, it got slammed for a 31.4% correction and is having trouble staying above its 200-day moving average. Medical equipment maker Intuitive Surgical is also a monster leader that is now starting to get in a little bit of trouble here. We can see that it's almost doubled since breaking out here, and is now having trouble staying above its 50-day moving average here, and suffered a 21% correction during this quick little pullback here. Educational stocks were quite strong as this new leg of the rally took off in March, and DeVry actually rallied very strongly and then fell really hard, suffering a 22% correction here, but found support here at the 200-day moving average and is now fighting a battle here at its 100-day line. Looking at Amazon.com, we can see that it's doubled since breaking out here in March of 2009 along with the general market, and formed 3 bases along the way up. It broke out of this third stage base here in April, and that base failed. Amazon delivered a 61% increase in profits in the first quarter, which is really great. So the stock will need to form another sound base for us to find an entry point into it. In closing, the way to make money is to buy the best institutional quality stocks during confirmed rallies during a bull market. We are monitoring leading stocks and the markets very closely and are ready to take full advantage of the next inevitable rally. Are you? Subscribe now at GoldenTicker.com for exact buy and sell points and to trade along with our virtual portfolio. Good luck trading.